Hi, this is Jinping G. My friends call me JP, aka an investor for all seasons. So today we're going to talk about PayPal because we had a subscriber request to review the stock, and it sounds like an interesting stock to me. It's not going to be a super deep analysis, but we're going to look through some of the key metrics and also some of the key insights from the annual reports. Since it's a high of around over $300 in July of 2021, the stock price has dropped more than 70% to about $84. At its current price, PayPal is around $100 billion in market cap, so quite a large company, and A- rated with 29, about 30% long-term debt to capital. So fairly well capitalized and kind of low risk in the S&P credit rating area. So obviously previously, I believe it was trading way above the fair value, right? About 70x price to earnings. It's come all the way down now to about 19x price to earnings. If we look at the past couple years of growth, average growth was about 18%. So using the rule of thumb, price to earnings is equal to growth rate, a fair price to earnings to pay for this stock would be around 18. Yeah, that's right, 18. And then its current blended P is around 19 point something. So it's close to fair value, but if you look at what the market has traditionally valued the stock at, it's been around 37. I think that's way too optimistic. 37x price to earnings. If we look at operating cash flow, it's fairly steady and growing year over year. We're actually expected to see a pretty large jump in cash flow in 2023. 2022 is about flat. If we look at the long-term performance of the stock, of the company itself, it was part of eBay before 2015, I believe, and then it was spun out. And since then, revenue has steadily grown around 15 to 20%. Gross profits have been fairly steady, and then net profits have also been fairly steady at around 15 plus or minus a few percentage points. We can also see that return on invested capital has been fairly steady over the last couple of years as well at over 10%. And this is also an indicator of the financial strength of the company, right? The profitability and viability of the business. So overall, the metrics are looking good. But this is kind of the historical stuff. Really, we invest in the future. So if we look at the forecast, and this is where I think part of the reason PayPal's stock price has dropped so much. If we look at the 2022 forecast, you can see that 6 months ago, the estimated or expected earnings was $6.88 per share. And then 3 months ago, it was adjusted down to $6.53 a share. And then it was then adjusted down again, and currently it's at $5.43, which is pretty significant in terms of the adjustment, right? So what is going on with the business? Like why are we expecting, we had such high hopes and then things are expecting to be doing much worse at this point? Obviously, the overall economy, I think, has some effect on that, but I think to really understand what's going on, we have to dig a little bit deeper into the annual reports. So this one, nope, that's the quarterly report. This is the annual report, and this is still just looking at 2021 full year. What we can see, I believe, income statement. Let's look at income statement. Excuse me. Consolidated income statement. Where is it? Statement of income. Okay, here we go. We can see that income or net revenue, has grown from 2021 to from 2020 to 2021, and however, net income has been it's a little bit lower. But this is I think mostly due to this line item of other income and expense. I did not look at the 2020 income statement or the annual report, so I'm not sure what's going on in here. This is probably a one-time kind of non-recurring event that contributed some income to PayPal. However, things are trending up, so that's good. And then if we look at the cash flows, they have quite a bit of, so cash equivalents and restricted cash at the end of the period is about $18 billion. The whole company is worth about $100 billion currently. So that's a fair amount of cash, I think, and they're managing it quite well. It seems like in a recession type of environment, PayPal is not anywhere near kind of a risky company because they're profitable and they have a fair amount of cash and they can continue to operate. If we look at the quarterly income statement for the first quarter of 2022, we kind of see something interesting here. So we see that net revenues rose, but it rose at a much slower pace than previously. I think previously, if we look at here, year over year, it's been about, net revenues have grown like 15 to 20%. This case, clearly less than 10% growth here, right? And then the other interesting thing is transaction expense rose faster than net income. So what is that? Like 500 million in increase in transaction expense, when net revenue only increased by 400 some, right? So as a result, your operating income is lower than last year, even though your net revenues increased. So net income is about half of what it was last year. So obviously that's not ideal. So what is going on here? So if we search for the term transaction expense in the annual report, you get an explanation of what it is. So basically it's the cost we incur to accept customers' funding source of payment. And it depends on, let's see, fees paid to payment processors and other financial institutions when we draw funds from a customer's credit or debit card, bank account, or other funding source. So it's reliant on the funding mix, which means where the customers are paying their PayPal transaction from. So this is kind of interesting, and I wanted another perspective from on the kind of future outlook of PayPal. So I looked into Seeking Alpha. There's obviously a difference of opinion. There's some buy, hold, strong buy, sell. But I found this article, and I feel like it's a fairly good and balanced view of the future outlook for PayPal. So 2 reasons to buy, 2 reasons to sell. The first one is e-commerce's long-term growth impact, and PayPal remains a market share gainer. So that's very interesting, right? So I've run an e-commerce store since 2008, and we've used PayPal as a payment method for all of those years. Actually, currently we use Braintree, which is a subsidiary of PayPal, but it's wholly owned, I believe. So everyone knows that e-commerce is going to continue to grow, and PayPal is an important part of that ecosystem. However, there's not a ton of stickiness in payment processors, and it's pretty easy to switch to another payment processor with lower fees. So PayPal, will have to continue to remain competitive, which means that we probably won't expect margins to be, much better in the future. However, as the e-commerce entire kind of market, addressable market grows, PayPal can continue to grow their revenues, exhibiting good progress in new growth areas. So this is pretty interesting. Venmo, which is owned by PayPal, had a 60% year-over-year revenue increase in the recent quarter. I think this is pretty interesting as a long-term thing because Venmo, I believe, is processing significant amount of volume, and PayPal has not really turned up the dial on monetization. You can still pay for a lot of things via Venmo with 0 fees, right? So there's quite a bit of opportunity to monetize this asset in the future. In terms of the negative things, reasons to sell, competitive and disruptive threats. So it's talking about other payment processors coming in and competing with PayPal. And then the other thing is future fraud profitability could be negatively affected by mix changes. So this, I think, addresses what we're talking about here, which is we're seeing revenues increase, but net profit or net income decrease. So what they're saying here is, the current trend is that PayPal's funding mix has been shifting back from debit to credit to a post-pandemic consumer environment. This results in an increase in transaction costs, which is what we're seeing in Q1 of 2022, which has negatively impacted PayPal's profit margins. So, we would expect this to shift back. However, I believe, given the long-term history of PayPal's operating margin, which is fairly healthy, we will get back to some sort of equilibrium where the operating expenses, specifically the transaction expense, is a bearable portion of the overall revenues. So overall, I think PayPal is a very solid company with a long-term outlook that if we look at the earnings, right, and look at long-term growth, there's possible returns in the long term. However, at the fair market value, there's not a whole lot of margin of safety. If the market rebounds to being very optimistic, you could potentially be making 40% returns in a couple of years, but that is speculation. You're speculating on how the market will perceive PayPal as opposed to the underlying business that you're buying. The underlying business fair value, there is not really a ton of margin of safety, and in fact, you could argue that it's still slightly overvalued given the next couple of years of earnings. So that's my analysis of PayPal. For me, there's not a strong thesis here because of the lack of margin of safety, and then I just don't think this is a clear winner for me. Potentially could be a winner, but please do your own research. Again, this is not investment advice, informational purposes only. It's been a pleasure analyzing this stock. If you have any other requests for stocks to look at, please comment below. And please subscribe as well. I'm trying to get to 100 subscribers. This has been Jingping G. My friends call me JP, aka an investor for all seasons.